Well, happy 4th of July. And what if I told you should be celebrating right now because the IRS is basically cutting checks for anyone bold enough to invest in real estate? Yeah, you heard me right. While everyone's arguing on social media about red and blue and whether we should celebrate the 4th, a bill just passed that can make you tens of thousands of dollars richer legally if you know how to play the game. Look, this isn't about politics. It's about green. It's about leverage. And if you're still looking at taxes like they're a punishment, you are playing checkers in a chess match. Now, I've been deep diving into this thing. They're calling it the Big Beautiful Tax Bill. And I'm telling you, this is a generational wealth cheat code hiding in plain sight. So buckle up, put the group chat on mute. This is in theory. This is your playbook. And it just got rewritten in your favor. Now, let me take you back a minute. A few years ago, I'm listening to Tom Wheelwright. He's the CPA behind Rich Dad, Poor Dad, and he drops this line that changed everything for me. The tax code is just a series of incentives the government is paying you to do what they want you to do. Think about this. That's it. That's the unlock. Most people, they treat taxes like theft. The wealthy, they treat taxes like strategy. You build housing, you get rewarded. You invest in underserved areas, rewarded. You create jobs, use clean energy, grow as a business, rewarded, rewarded, rewarded. It's all there. You just have to read the code and run the plays. But Ramin, I'm a W-2 earner. This doesn't apply to me. Yes, it does. If you start a side hustle, buy a duplex, form one LLC, you go from spectator to player. And this bill, it just gave you a home field advantage. So here's what just dropped. 100% bonus depreciation, it's back. Section 179 just got beefed up. Opportunity Zones 2.0 are in play. The salt cap, now I'm not talking about table salt, just got a massive lift. QBI deductions are juiced, and for high earners, that 37% top rate, well, it's locked in for good. But here's the kicker. These moves have expiration dates. Some disappear in 2026, others in 2029. This is a timer, and the countdown has already started. So let me break this down for you section by section and what you have to do. 100% bonus depreciation. This is the crown jewel, and most people don't even know it exists. Let's say you buy a $200,000 rental. Normally, you'd write off about $7,200 per year over 27 and a half years. We call this MACRS depreciation. That's fine, but we don't play fine. You bring in someone like Geraldine Serrano, my cost segregation specialist, and she breaks down your building into parts: appliances, carpets, lighting, landscaping, things that wear out in 5 to 15 years. And here's a kicker. With 100% bonus depreciation, you write all of that off in year one. Let's say Geraldine finds 30% of the building qualifies. That's a $60,000 deduction. What? You make $100,000 that year? Bam, your taxable income just dropped to $40,000. Rewind and play that again. You still got the rent, the equity, the appreciation, but Uncle Sam, he's getting the crumbs. Wait, is that even legal? Yeah. The IRS literally wrote this one into the code. It's their way of saying, thank you for stimulating the economy. And it was supposed to be gone by now, phased down to 60%. But this new bill, it brings it back to the full 100% through 2026. This is your shot. Do not let this pass. Section 179 write-offs. Now let's talk about the one everyone overlooks, Section 179. This lets you write off everything you're spending on upgrades already immediately. I'm talking appliances, flooring, HVAC, air conditioners, solar systems, holy cow, smart locks, furniture for your Airbnbs, even laptops, routers, and office chairs. Is your mind blown? Let's say you rehab a duplex. $14,000 for the HVAC system, $22,000 for the kitchen, 4K in cameras. That's $40,000 in upgrades. If you're in a 35% bracket, you just saved $14,000 this year. Well, what about cars? Oh yeah, if it's over 6,000 pounds and use 50% for business, that G-Wagon, that Ford Raptor, that Range Rover, that's a $90,000 deduction in year one, the entire amount of the vehicle. Just keep your records tight. IRS doesn't play with a mileage log, so don't think you're going to be doing Costco runs on Sunday and writing this whole thing off. You got to use it for business. Opportunity Zones 2.0. Here's a move nobody's talking about, but the wealthy, they love it. Opportunity zones, and this is especially huge for you guys in San Jose Bay Area who work for high-tech companies. Let's say you sold your crypto or Apple stock and you made $150,000. Normally, you'd owe about $35,000 in capital gains, but instead, You roll that into an opportunity zone fund, maybe a mixed-use building in Gilroy or a triplex in East San Jose. Here's what you unlock. You defer the tax on that 150,000 bucks that you made on Apple until 2026, and you possibly reduce the amount owed even. Then you eliminate all future gains forever if you hold that deal for 10 years. Rewind if you have to, and I said this. Yes, all appreciation on the property you bought is tax-free. That $2 million project becomes $4 million, you keep the $2 million gain entirely tax-free. Yeah, sounds too good to be true, right? Nope, it's just unfamiliar to you. This is in the code as well. It's legit, and it's your move now. QBI, Section 199A. If you own rentals through an LLC, an S-Corp, or a partnership, well, this one's for you. You might be eligible for a 20% deduction on your net income just for operating this business through the right structure. So $100,000 in rental income, you'll be taxed at $80,000. But here's the thing. It all comes down to your setup. If your CPA hasn't looked at your entities in 5 years, and you're still using your mom's old CPA that you said was a great guy, you're leaving tens of thousands of bucks on the table. Structure matters. So does strategy. SALT cap. SALT, yeah. State and local taxes. If you live in California or New York, you've been getting slammed. The old SALT cap only lets you deduct 10,000 bucks. Even if you paid 40,000 bucks in state income and property taxes, 10,000 bucks was your limit. Now that cap just jumped to 40,000 bucks for households under $500,000 in adjusted gross income. You're finally getting credit for what you're actually paying. That's $10,000 to $14,000 in real savings. No tricks, just overdue policy. Now let's talk about that 37% tax rate. High earners, listen up. The top bracket is now 37%. It was supposed to expire and rise to 39.6, but this bill might make that 37% absolutely permanent for the rest of humanity. You know what that gives you? Planning power. Now you can time your gains, stack deductions, accelerate income, all with the confidence of knowing about your tax hit. That's advanced chess. Start thinking 3 moves ahead. Now, here's your real talk action plan. Build your team. You need a proactive CPA, not a box checker. You need someone who plans with you and thinks ahead of the game along with you. You need to identify your gains, what you can sell and reposition, stocks, flips, crypto. Scan for opportunity zones. Number 3, find the right deals. You'll need to look for properties where bonus depreciation, cost segregation, Section 179, or opportunity zone status applies. These aren't unicorns. They are everywhere if you know how to look. Now look, you got the tax code in your favor. The window is finally open. And this is the biggest wealth moment we've had in over 10 years. Ask yourself, are you going to watch from the sidelines or are you going to run the plays? Do me a favor, hit that subscribe button if you're ready to build. Drop a comment with the part that hit the hardest. And stay tuned for part 2. We're going to stack these strategies like dominoes. Let's go.